Welcome back, investors, to Ticker Time News. I'm Adam, and Upstart has dominated the market since going public last year because of its disruptive business model, strong fundamentals, and a market that's finally starting to see the potential of artificial intelligence. So let's dive into Upstart and see if there's a real investment opportunity, or has Upstart's 1,000% gain in the last year overvalued the stock to the point where the risks outweigh the reward. Now, before we do, I wanted to share with you my personal goal for this channel, and that's financial freedom through education. And I need your engagement to help reach as many people as possible. So please take a few seconds to click the like button, share this video, and help others reach financial independence too. Now, Upstart, ticker symbol UPST, is an online consumer lender with a cloud-based artificial intelligence AI lending platform. The company uses AI to evaluate the information provided in the loan application. Upstart's artificial intelligence can actually use alternative data to help give applicants with bad or fair credit a better chance at qualifying and getting a lower rate. Now, Upstart's share price has exploded over 1,000% since going public last December. There are many factors for why Upstart's stock has been such a powerful outperformer. First off, Upstart as a company has very strong fundamentals. And second, the market has finally woken up to the potential of artificial intelligence and how Upstart is using AI for lending. And third, Upstart offers what I consider to be an attractive value proposition to its partners in the financial world. Upstart is not just a lender, though. It's a lending platform with a cloud-based artificial intelligence, or AI. Now, artificial intelligence can mean a lot of different things, from the Tesla bot and Tesla's self-driving car, or what Elon says, a computer on wheels, to the recommendation engine when you open up Netflix. For Upstart, its AI is a modern day data scientist using its techniques to achieve better prediction of real credit risk. In simple terms, the company uses AI to evaluate the information provided in the loan application. Now, understanding Upstart's unique business model is key to demonstrating why it deserves higher sales multiples. A common myth seems to be that Upstart is taking on substantial credit risk. In reality, they are simply matching investors with borrowers and charging fees for their service. Upstart funds only about 2% of their loans with its own money, while most other risks are transferred to bank partners. This makes it easier for Upstart to charge lower interest rates compared to traditional lenders, since they don't have as much exposure from defaulting loans. This also means that Upstart can make more money by originating more loans at lower rates than its competitors, which will lead to higher margins over time. At the end of Q2, the company had $82 million of loans on its balance sheet, while the company announced that it was then originating more than $1 billion of loans on a monthly basis. Upstart has a real head start. By the time alternatives or copycats come to the market, Upstart is a comfortable leader, widening their brand and competitive advantages. The market for financing of auto purchases is huge and ripe for disruption. Upstart's AI technology gives it a head start in a market several times the size of personal loans. In recent days, the company announced Upstart Auto Retail, an end-to-end platform for auto dealers and buyers that dramatically changes the car buying paradigm. The solution is an evolution of Prodigy software, which Upstart acquired in the second quarter. Upstart believes you cannot change the car buying experience without touching financing. Since the beginning of 2021, the number of dealerships that have signed up for the software has nearly tripled. With the addition of Upstart powered loans, dealerships will be able to instantly offer affordable financing to more of their customers. Buying a car is an iconic and memorable experience for most Americans, but the financing step, well, that's where things often unravel. Has this happened to you before? It's happened to me, especially when you're young and it's your first time buying a vehicle. Upstart Auto Retail will provide millions of consumers with a car buying experience worthy of 2021, including that all important financing step. Each year, approximately $1 trillion of cars are sold in the US, and most of them are financed. Yet, purchasing a car consistently ranks among the worst consumer experiences, with less than 1% of buyers satisfied with the current process. Upstart Auto Retail with AI enabled loans will allow dealers to provide the online and in store shopping experience that customers demand, from shopping and vehicle selection to financing and checkout. Upstart Auto Retail is an end-to-end retail platform that has helped top franchise dealers from 33 top brands such as Toyota, Honda, Subaru, and Ford sell billions of dollars of new and used cars and increase customer satisfaction. DGDG, the largest family-owned dealer group in the San Francisco Bay Area, has been using what is now Upstart Auto Retail as the only retail solution across the entire dealership group since early 2020. They've added Upstart powered auto loans as part of its retail process. They've said that the auto selling solution that they've been using from Upstart has empowered their salespeople to make the buying process more transparent and help sell more vehicles at a higher profit. Let's take a look at the stock chart. Right now, you can see two patterns here. First, both of them are symmetrical triangle setups. Right now, we have Upstart in a symmetrical triangle. We've got the top purple line here, and we've got the bottom purple line here. Support on the bottom, resistance on the top. As the price continues to move forward, the price will tighten. Higher lows and lower highs. And as it moves to a nexus point, look back here what happens. When it's in the symmetrical triangle, making lower highs and higher lows, it reaches this nexus point where it, boom, it shoots up in price. That is what we are heading for with Upstart right now. The credit industry is a multi-trillion-dollar market opportunity in the United States. AI-driven lending with totally better rates and default risk is not a zero-sum game at the moment due to its immense runway for disruptive market capture. This will play out over years. The losers are the banks using old school FICO scores and credit card providers operating in a highly fragmented and dysfunctional system of what we could say is yesterday's credit market. Simply put, new credit wins, old credit loses. I believe this new paradigm shift will allow Upstart to continue to outperform the market's expectations year over year going forward. Upstart's pricing power advantage that it has over other players in the industry, the potential for increased vertical expansion, and its forecast growth are all driving me to Upstart. These factors combined should drive significant upside over time, making Upstart an attractive investment opportunity, especially with its current chart pattern setup and pullback. Well, that's what I think about Upstart right now. Let me know what you think about Upstart in the comments and about their valuation. And remember, your comments make these videos so much better. Thank you so very much for watching, and I will see you in the next video.